objective of carrying out these dialogues and sessions on various topics, specifically related to areas which are of interest to foreign investors. So this is an opportunity for one of the sessions that we have arranged on economic related session. And the opportunity is budget. And we all know that the budget has come on June 11, and there are many questions from a lot of members there. So this is a very good opportunity for you to ask questions, and we have our experts here. We may not have the answers to all the questions, but at least it's a way to start the discussion and conversation, and then we can take the course forward. So today we have two of our expert, Ali Khizar. He is the director research at Business Recorder, and we also have Samiullah Tariq. He is the head of research at Park Kuwait. So I would like to now request Ali Khizar to take the dice and have they start the session.
Presentation.
Yeah.
Thank you, Kashif, and thank you, OICCI, for inviting us, and thank you all for coming and attending it. So this is a session where we will discuss about the implication of the budget, and we'll shed some light on the numbers released in the recent economic survey. And then we'll take questions of a few people, and if you have anything which we haven't covered, feel free to ask. And if you have any question in between which is pressing, you can ask. And otherwise, you can wait for the presentation to end, and then we can have a conversation. So the format is something like that. We just have one presentation, and we both will be talking. Something will be covered by him, something by me. So it's going to be a conversation like this. So, Sami, would you like to start?
So in my view, if you just upload the presentation, so in my view, the general theme of the budget was that the government did not want to take a major risk because the stability has been achieved after a while and it has taken a lot of effort. So the government has stuck to fiscal consolidation. Even in my view, the growth target which the government has given for about 4.2%, I don't think that it's going to be that easy to achieve that growth. And in my view, the growth expectation should be around 2.5 to 3%. Yes, inflation would continue to remain low as economy is consolidating. Fiscal deficit is expected to remain low. Current account deficit, obviously, Pakistan might not incur current account deficit for another year, or there might be a minor current account deficit. So, but the major theme was consolidation, no major risk, and staying on the path, and stability over, government has preferred stability over growth because the scars of 2022-23 were very deep. So if you see that the economic survey had been released in the last week, just before the budget, the economy grew by 2.7%, which is lower than the 5-year, 10-year average, historical averages. Yes, the growth was slow, but this year was for stabilization. Inflation has come down significantly. It's around, it was 0.3% for last month. So inflation has remained low, current account has remained in surplus, currency has been stable, reserves have been increasing, and interest rate has come down significantly from 22% to 11%. So the highlight was stability, preservance, consolidation. So even the gap between interbank and open market rates has been controlled. Imports have been relatively relaxed. Dividend repayments, repatriation has been better. It's not perfect until now, but it's better compared to previous years. A lot of backlog has also been cleared. Almost all the backlog has been cleared. So even on the fiscal side, for the first 9 months, the deficit was 2.6%. For full year, deficit is expected to be around 5.9%, which is 7.2 trillion rupees. And the last quarter, the deficit would be higher because of the major disbursements during the last quarter, as well as because of the fact that the SBP's profit had been transferred during the first quarter, which makes the first 3 quarters much better compared to the last quarter. So the major issues in the economic growth have been the agriculture sector. It has grown very less at around almost 0.5%. Almost all major crops have declined. The major crops overall have declined by 13.5%. And the manufacturing sector, the large scale manufacturing has also contracted for the same year. So this has been the major issue because the supply side of the economy is not growing, while the other sectors, services sector is growing, which might lead to a greater demand on the other hand.
So just to sum up the whole stabilization thing, what Sami talked about is about the bigger macro picture. So what we have experienced is a massive debt crisis. So our ability to service our debt was diminishing, both on the external side and the domestic side as well. Though our debt to GDP ratio was never very high, it was 80% or below, even at the peak in 2022 or something. So it was not like alarming versus many other economies where you've seen much higher debt to GDP. But our ability to pay was low, like, the net federal fiscal revenue were negative, and they're still negative, but they were in and the primary we were running primary fiscal deficit, and the fiscal deficit was going up and up, and the domestic sources were squeezing. That's why we have so many open or market operation from the state bank. IMF does not allow any borrowing from the state bank, and external sources were drying. We all know that, and that's why we are forced to run current account surpluses and all that. So that is the situation. So this is what we've been going through for the past 2 years. What we have achieved in the past 2 years is running primary fiscal surplus. So we got last FY24 primary fiscal surplus was somewhere around 0.9% of GDP. This FY25, the budgeted number was 2% of GDP, and expected number is somewhere 2.2% of GDP. So we are getting a better primary surplus than what was budgeted. So before delving into the reasons and the consequences of those, but that's the outcome. And the target for the next year is 2.4% of GDP. So that's how the budget is getting tighter. So in the 3 years, the budget is getting tighter in a very holistic fashion. Both the consolidated, including the surpluses from the provinces and all that. Now, when you running those kind of primary fiscal surpluses, they are lowering your debt to GDP ratio. It has come down from, I think, a peak of the 77% or 76% to mid 60s, and probably come down to 60% in a year or two if we keep on going that way. And your fiscal deficit, which went up to somewhere around 7 to 8% of GDP, is down to below 6% this year, and it's targeted at 3.9% next year, which is probably the lowest since FY08. So those are the numbers which are very important to see that we are generating fiscal space, and that fiscal space will give impetus for growth, not this year, perhaps the next year or next to next year. So that is how the broader line is it. Now the next question is, how did we come up to that number? How did we get that 0.9% of primary surplus last year? And more importantly, how did we get 2.2% of primary surplus this year? As we know that after 2022, we slashed on the imports through policy rate, which increased up to 22%. Then there were implied import restrictions, which you all have experienced over the past. State Bank was not opening LCs frequently, and imports were massively restricted. Then, due to the very high inflation, which was the highest, we had the highest ever inflation of 38% in May 23, and we got a 1 year of 24% and 1 year of 29%. So those were massive inflation. So there's a case of demand destruction, and because of those factors, the demand was less and import were less and all that. And but our collection of taxes was heavily reliant on imports. Historically, if you see between, let's say, FY18 to FY23, about 60% of tax were collected indirectly and 40% were collected directly. And a large chunk of direct taxes are collected in indirect fund. And within those indirect taxes and direct taxes being collected in indirect fashion, a very good chunk were collected at imported stage. So when you import something, as you all know that there are withholding tax on sales and income which are being deducted. Then you have custom duty and regulatory duties and all that. So as FPI used to publish that number, I think FY19 till FY19 or FY20, till that time, over 40% of tax collection was collected at the imported stage. So with 23, 24 and 24, 25, your imports were low. So naturally, when imports were low, the tax collection on imports went down as well. And so you had to rely on the direct taxes. In theory, that's great that indirect taxes are regressive and direct taxes are more equitable and all, and you move to the direct taxes. But what you did, you all know that you all are, I'm almost all are salaried class, if not entrepreneur and self-employed. So the amount of tax you guys are paying, I don't need to tell that. And then the amount of tax your companies are paying, including the super tax and all that, you know that very well. And if you are a non-salaried individual, or if you are the AOP and all that, your tax rates are 45% plus surcharge, and salaried is 35% plus surcharge, and corporate is 29% plus super tax plus lutrum butrum and all that. So those taxes were increased, and that has resulted in higher collection. So last year, your tax collection in terms of GDP was 8.8%. And this year, your tax collection in terms of GDP, FBR I'm talking about, is going to close somewhere 10.4, 10.5% of GDP. So from 1.8 to 10.5 is about 1.7% growth. That's a big growth in terms of GDP. And that's what the FBI chairman was saying somewhere. I was listening to his some interview and all that, that this is unprecedented world over. Indeed, it is unprecedented. But the kind of tax rates what you are collecting are unprecedented as well. So you can't say that only collection is unprecedented. The way formal sector is taxed is, and the quantum of increase in the rates were unprecedented as well. So you choke the formal sector, and that has increased in formality and all that. The debate, but that what happened and all that. So this is how we got this consolidation. So we got the consolidation. The end result is that yes, that stability is regained, but at what cost? By choking the private formal sector. This means the incentive to leave country, which we call brain drain by a salaried individual like yourself, is high. And many of your colleagues might have left in the past 2 years, and many of you might be thinking of doing so. So, and many of your employers and the entrepreneurs, we have the big groups, family groups, and MNCs. They've stopped investing in Pakistan, and they started taking the capital outside Pakistan. That's how the capital flight is. As if you go to Dubai, you pay 15% tax, whatever the cost, whatever the returns. Here you pay about 45%, 50% tax. And so the wealth creation and the capital formation is disincentivized in Pakistan. So there are certain costs. Unemployment is probably the highest in Pakistan. Poverty has increased substantially. Middle class has eroded. People have changed their lifestyles, still doing so. And that is what the consequences of that austerity we are living in. So come this year, there were expectation that okay, you got some consolidation, commodity prices are in your favor, they are lower, being an imported country where our major export is textile and services. where commodity prices play a less role than what we import, oil and other commodities, where reliant on the prices is high. So that prices have come down. That has given you an opportunity to import more, to generate some demand without creating a balance of payment crisis. You see, your remittances is perhaps going to be higher than your exports, goods, and services combined. And remittances in the short to medium term is insulated to the global commodity prices. Yes, in the long term, if oil price come down, the boom of the Middle East and all that, but usually the cycle reverse in a couple of years. But when your cycle is down and your oil is down, your imports are coming down, but your remittances are not, and your exports are not coming down in proportion to what your imports are coming down. So that's positive to your current account. So you have that. And then that gives you a space on the fiscal side to generate more revenues. For instance, petroleum levy. Petroleum levy, you're saying that the 1.4, 1.5 trillion government is budgeting to uh, collect based on the average petroleum levy rate of 80 rupees, which is currently in, I think, 77 or something. And so they can increase up to 100 or something. Though it's not clear up there, but they can. And that's how they collect it. That's fine. That's right. That's the right thing to do. And so there was some expectation that there will be some relaxation in the salary taxes, in super taxes, and other form of unprecedented direct taxes which were imposed on you people in the last couple of years. And government was promising that. What we got is peanuts. So you must have all done your calculation and all that. Maybe your earnings 2,000 to 7,000 more, depending upon which salary bracket you fall into. Right? Super tax is very marginally lower for certain companies, but it largely remained there. And then they have penalized the formal saver. So if you're investing in a mutual fund, in a fixed income, or if you're keeping your savings in banks, the bank deposits, those rates have increased. The withholding tax have increased from 15 to 20%. However, they kept it same at 15% for stock market. The rationale they're giving is okay, there's an active income and a passive income. And so the taxation on active and passive should be different. And but in their absurd definition, they are differentiating between the passive income forms. Like if you're investing in a fixed income versus in a equity, they're treating it different. That's absurd. That's a risk taking appetite. Some people have different appetite, so that logic is totally absurd, right? Then they have relaxed the rates on the real estate, which is correctly to do that because they were the FED on the buyer was uncalled for. It was on the transaction that shouldn't be happening. Then you got your withholding tax on the seller that shouldn't on the buyer that shouldn't be okay. If Sami is selling his plot to me, he's probably having a capital gain, so there should be withholding tax. But if I'm buying, I'm buying from an income which is already taxed. Why would I pay tax on that? So the transactions were not happening. But the end objective is they are incentivizing speculative investment in stocks and in real estate, and that's not promoting capital market as the finance minister was saying, because if you are a blue chip company or angro or something, and your PE is already 12, that's already priced in or you're a Nestle and your PE is very high and all that, so that speculative incremental money would not come into your company. That would come into the smaller stocks like WorldCore or whatever the kachra Sami call them. So they'll come into that. That's speculation. In real estate, it's speculation. So you are incentivizing speculative investment and speculative saving versus the formal traditional saving instruments. That's one thing, because it's easier to do that, and you want to generate some growth, or you want to happy certain circles, and you're doing that. So this is the story, and then they have increased smaller taxes here and there. I mean, they've increased the GST on the small cars, they've increased the GST on the hybrid cars and all that. And the rational side, okay, if like the FBI chairman was saying that if someone is consuming soap, that guy is paying 18% tax. A small car guy was paying 12.5%. He should be paying 18% as well. Okay. But if you get a little bigger car, you're paying 25%. Why? If you are rationalizing things, to rationalize that as well. So why you give half thing, half not? That's the thing. So that's do there where the convenience is, where the collection is easier and all that, and they're doing it. So it's more of the same, a bit tighter. That's what I wrote about it as well. And the thing is, so your tax rate would remain high, and the pressure would remain high. And another way of FBI collected higher taxes. So when you move from 8.8 to 10.6, as you all have must know that FBR is collecting advanced taxes of that. And in certain companies, some of you people must know that FBR has collected advanced tax till October and all that. That is happening, right? And then there's other thing, like I give you one example. You all must have heard about this example. There was a case of charging 90% tax on the bank's forex income. There was a stay in court. The stay was
Vacated.
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 Vacated. Yeah. And then within half an hour, FBR team were there in the bank's office. Okay, he's Mizan, I'm HPL. FBR team is going to Mizan to get the tax liability of HPL because the bank balances and other way around. And they were harassed. Eventually, by the evening, banks paid 23 billion, and FBI was clapping on that. But is this the way to do that? That's how they collected it. They harass it and all that, and they do that. They do raids here and there and all that, and you must have all experienced it. That is the story. That will continue. FBR is asking for more power, and they're saying that if you give us the power, like that now, if FBI want to, if you're a CFO in your company, FBI wants to catch you, they have to go to the court and then can get you. With the new power, all they need to ask the commissioner to catch you. And even if a guy can catch you and tell the commissioner later as well. So the harassment could go next level. So those are the things which you perhaps have to deal with. You have to pay higher taxes. And then there's another thing happening over there. There's a national tariff policy coming up. I mean, and because of that, there would be higher influx of import, right? When there would be higher influx of import, the first line of defense is exchange rate. So whenever you have a national tariff policy, anywhere when you rationalize tariff in the world, and the evidence is around which the policy advocates talk about, you reduce the import tariffs, it reduces the anti-export bias, overall trade increases, and trade balance improves. The i.e., your exports are growing higher than your imports, and you generate more employment, GDP grow, and all that. But they are always accompanied by exchange rate adjustment. So the first line of defense is exchange rate. Are they going to adjust the exchange rate? I have serious doubts on that. Then what will happen if they don't exist import and they don't have reserves? State Bank, even after getting to 14.3 billion by June, they'll be covering 2.5 months of imports. Yeah. So what will they do? LC restrictions. Like in 2022-23, when LCs were restricted, somebody was telling me that good bankers, like suited booted like you, I'm not saying one of them would, you, but something like that, were asking for iPhone to open LCs. So these things will start again. All this will start again. And then people will go into Pindi, Islamabad, State Bank, and all that to get the L-season opening and all that. So those risks are there. I mean, these are the risks I'm identifying and all that. And so that's a little bit summary on that. Now, and coming to the economic survey numbers, which Sami was explaining earlier as well about the growth number, is that we the growth is provisional growth is 2.68% for this year. Yeah. And this mean in the last quarter, which we are living in, growth is expected to be at 5.3%. LSM, which is negative 1% in 9 months, is expected to go up to 4.8%. Electricity, gas, and utility, which is again a negative till 9 months, is expected to go up to 28%. This means over 100% growth in electricity in the last quarter, 8 to 10% growth in LSM in the last quarter, and so on and so forth. Do you see this possible? Do you see this happening in your company? No? Shampoos are not selling or
these fiscal measures have given a lot of space to the private labels. If you look at the the comparable markets like Turkey, the private labels are growing with a lot of speed. So I think the way you have summarized the budget is absolutely right, but I still see a lack of long-term policy measures,
absolutely.
which is not there.
This budget is just like if plus minus.
It's only plus minus, it's tweak. So long-term commitment is not there, that how to promote, support the local businesses. And whatever you have identified and described, I think that's the same position. With regard to the powers of enforcement to the board, we at OICCI evaluating it, and we will be taking up with the anomaly committees as well. The bigger challenge is that we fear that all those enforcement powers will be used against the already squeezed sector, which is organized sector. Because we have requested from this very forum to the FBR and to the finance minister that we speak a lot about tax to GDP ratio of the country. Let's discuss the geographical tax to GDP ratio. How tax is being collected from the one of the largest engineering hubs of Pakistan. How the tax is being collected from one of the largest textile hubs from Pakistan. So if you continue to rely on LTOs, and even in LTOs, it's out of 300 taxpayer, the majority of the revenue spinners are less than 100. So I think this inequity, if continue, then the incentive to evade is too high. That's one thing. And taking your time, the second thing is that there is something which needs to be done with the policy as we discussed, and I think there is something needs to be done on the perception as well. So making money is nothing bad, but paying tax on that money is something which we should do. And I think that's what we are continuously advocating with the Federal Board of Revenue and the Ministry of Finance. Last thing is that I have a small comment. Even this year, the engagement with the stakeholders was much less. You must have seen that many people are saying कि जी budget 25 तारीख को IMF के website पे लग गया था. I'm not among those जिसने देखा, but I
Haven't
feel
seen that either.
but I feel that engagement is quite low. Or if I look from the FBR side, they are right in not engaging with us because they don't have much of the authority कि वो positive engagement को भी translate कर सकें finance bill में. So neither they have the fiscal space nor they have the capacity to really advocate something which is the right thing. So I don't know how long this will go on. It's been going on since many years. But yes, this is the challenge. And I think people like you, besides looking at the macro, if you do or get an opportunity of looking at the micro side, you will see that there are a lot of changes coming in the retail and trade, and it is again scot free.
So you think, for example, in my view, tax rates for individuals, compliant taxpayers, as we were talking about, the corporate tax rate, the super tax rate, the tax rates for salaried individuals, for non-salaried individuals, they're significantly higher compared to regional averages, global averages. So as Ali mentioned that when you compare it with Dubai, the rate for income taxes, for example, for corporates is like 15% over there. And for us is like 29 plus 10 plus if you take out a dividend, it's 15 again. And if it's more than, so it gets 25. So when you compound it in next 5 years, so the capital formation gets destroyed. And that impacts obviously the documented economy, the jobs, investment, everything, because major investment is done by the formal sector and not the informal sector. So that is one thing. Secondly, what you mentioned is disparity amongst taxpayers. For example, the manufacturing sector contributes approximately 2/3 to the total tax collection. The retail and wholesale does not contribute, the agriculture does not contribute. And in this budget, we have not seen that either. So that is also a very compelling argument. Thirdly is the undocumented sector, the cash in circulation, which has crossed 10 trillion. So that is a major issue as well. And with the taxation on e-commerce and digital channels, obviously the incentive to go on cash will further increase. And with an 18% tax on even on POS, point of sale transactions, the formal players are at a significant disadvantage. So that is also a major issue to ponder upon.
Just to give you one example, and I'll take the benefit of myself being the salaried individual. So now I'm pleading my own case, so please bear with me. You have taxed the pension schemes. So,
Yes.
what is available to a salaried individual?
It's over.
He
This was last-
invests all his bonus into a pension scheme. If he's a 45, 50 years old person, he's investing all his bonus in the PF, getting a tax rebate and waiting for 60 years to encash it. Now it has gone. So when I'll be 60 and I'll be encashing my pension fund, I will be not taxed, which I have earned. Let's say at the age of 45, my tax bracket was 30%. At the age of 60, my tax bracket would be 45%. So I've invested by getting a 30% benefit, but I will be encashing at the time of my retirement, paying taxes at 45%. So, it's now you are now penalizing people. You're I think the good part for a salaried individual was when the interest rate was 22%. Yeah. At least I was earning on my savings. Now you are not giving me earnings. Now not you are giving me any rebate. And by virtue of inflation, whatever I'm saving, I'm not getting the same benefit out of it. Just, I was talking to somebody at the automotive sector. One car, let's talk about an SUV whose price is 22 million. Out of that 22 million, 12 billion is going into taxes. If you compare the car price without taxes with the car price in Dubai and translate into the dollars, we are still cheaper. So I think these myths, somebody needs to keep knocking on the door. Someday somebody will open the door and listen to us. I'm not saying I'm very disappointed because this is not something which I'm new to. हर साल यही कहते हैं कि जी डिसअपॉइंट हुए हैं, तो एक साल मजीद ऐसा आ गया तो कोई परेशानी की बात नहीं है. But the brain drain will not stop. Even if today I get an opportunity, I will leave. I'll be very honest, because I need to take care of my family. I need to give a good education to my kids. Netherlands 56% tax. When I speak to my regional colleagues, they say you are very lucky. Aapka to 40% hai, we have 56%. But that 16% is without education, without security, and without medical. So, कोई हम नई बात नहीं कर रहे. We keep saying it, but these are the, अली साहब आपने बिल्कुल सही कहा. और स्ट्रक्चर्ड बिजनेस के लिए जितनी आप ड्यूटीज एंड टैरिफ्स कम करेंगे, जब तक आप इंपोर्ट पे वैल्यूएशन सही नहीं करेंगे, यू विल बी पुशिंग अस टुवर्ड्स द वॉल. तो शैम्पू कल आपको बाजार में इंपोर्टेड बहुत सस्ता मिल जाएगा क्योंकि आपने ड्यूटीज रैशनलाइज कर दी हैं. You are, if you look at the import tariff realization, we are being treated like Dubai. We are being treated like Singapore, जिसकी total population 15 और 16 million है. So with 250 million people, import realization भी थोड़ी सी rationalization से करनी पड़ेगी. Otherwise, you will really hurt the local manufacturing sector, which is generating employment without having any backward or upward integration.
Secondly,
Exactly.
वो जो bank deposit, the return on the bank deposit will now be taxed on profit on debt. Withholding tax was 15%. Now it will be taxed at 20%. So I think what I was talking about, the cash in circulation, A, and secondly, the documented sector. So this was documented saving. Now with the rate declining, as you said, and the higher tax, obviously the retention to the saver is going to be even lesser. So that is one thing, and that is going to end with the very low saving rates in Pakistan at around, and a low investment to GDP ratio. Obviously, we need more savings in the formal sector. That is a major requirement. So I think that was also a bit disappointing uh, that this profit on debt is now taxed at
Exactly. Now,
20%.
if you see that the interest rate is about 11% now, let's go, it may come down to 10%. So you'll get 8.5% on your savings account, that you get the 20% cut on that. That adds on to another maybe 1.5% something. So you end up with 6.5 to 7%. So, and then you see that, okay, if I keep my money in the bank account, I get 6 to 7% a year. And if I keep it the foreign currency, I can bet that if the PKR is depreciated by 7%, I'm even. So people will start moving to that avenue as well. So there would be some pressure on that. And the thing which you said is that the higher taxes is brewing the informality. I mean, one of the example I give you about is the dairy and the juices sector. I know the representatives are here or not, but I'm sure they're part of the OICCI. And so there's a GST on the dairy products, so the 18%. Then there's a 18% tax on juices, and then there's another add-on, I think 15-20% FED on that as well on top of it. What is happening after that is the informal players are growing. Informal players are growing. So when the informal players grow, especially in the food products, so what you see that the quality standards are, the compliance standards are not being met. I mean, they're very high, stringent food compliance and quality standard by provinces, and those MNCs ensure to comply to those. But when you're an informal player come, they don't. Another problem then the packaging. They get their packaging from the Tetra Pak packages. Again, it's a domestic industry and all that. They smuggle their packaging from China, and then they produce there and sell in the market. They're evading taxes. They are disturbing the supply chain of the intermediate goods, and they're playing with the health of the people, and they're not ensuring the quality. Then another thing, there is an SRO 263 or 267 which says that all the food products which are imported should be labeled in Urdu and all that. So there's a special packaging for Pakistan. In that case, they'll be tracked and taxed. But you go to Imtiaz, Al Fatah, or any big store, and you'll find out the products, they're full with those products.
So they have already created an exception. This SRO has been issued by the Ministry of Commerce with 3 restrictions. One, the printing of retail price, halal certification, and the the contents of the pack in the local language. And if you don't do this, then the FBR will charge value addition at the import stage by 30%. So whatever you import will be jacked up by 30%. Now the challenge is that the valuation, the value declared is so low that even if you charge with them with 30%, it has no impact. They have changed the valuation for tea and fixed the price on 1200 rupees per kg. That is something which has been done in a great manner. But if you see this year, they have brought some imported commodities in the third schedule. We have already urged them that third schedule will not serve the purpose unless and until you compel them to print the retail price. Now they will say that, we are importing in small quantities and we cannot compel the manufacturer. I think there needs to be something which, because we are importing into North America and we are doing a lot of labeling at the port stage, I think we need to do this. The one last thing is that we are happy with the competition. Our only challenge is that whosoever is taking my shelf space should contribute to the tax in the similar fashion. The problem comes in that whoever is acquiring my shelf space is not sharing my tax burden, and I continue to pay tax on their behalf. And I think that's the biggest disparity.
The level playing field is missing.
Another issue which was probably not very highlighted by a lot of people is that carry forward losses have been capped at 2 years. So this had been a major thing. It used to be 5 years previously, then it was brought down to 3. Now it has been brought down to 2. So this is also a major issue for the formal sector, which take this benefit for deferred taxation, etc. But now it's very tight for them to take benefit.
So I mean, these are genuine issues. These are genuine issues, and one of the issue which you highlighted in your last comment is about the custom valuation. So FBR is talking about reforms. They've been talking about, okay, track and trace system. They're talking about, like in tobacco, that we're going to get to the field and monitor that, and what they have done in sugar and all that. They've been showcasing that. But the elephant in the room is the custom valuation, where the massive undervaluation, and that is killing many industries, and that is killing so much potential in the taxation. And nobody's talking about that. Even this national tariff policy, where tariffs are reduced, I mean, where regulatory duty and ACD will be abolished in 5 years, and custom duty would be at a maximum 15%. Okay, let's say they'll get into that, but they collect taxes, income tax, they withhold sales tax at the import stage. Then they have 18% GST and FED and so on and so forth at the retail stage. So there's enough incentive for the trader to evade even after the reduction of the duty. So if the trader is keep on importing, smuggling or importing and undervaluing that, the whole purpose of the tariff policy will fizzle away, even if you depreciate the currency as well. So these are the factors where nobody is really talking about, and nobody is doing anything on that, unless you do the massive all in on this, would you say, in the custom department. Overall in the custom department, you're not going to get anything on that, but there's nothing happening on that. So that's a big thing which we all need to talk about, which we all need to do. So that's there should be level playing field. Okay, we are not here to say that we're going to protect unnecessarily local manufacturing as they seek rent. Fine. As you said that when you compare the cars, you compare it without the taxes, right? And when you open up the import, you'll find out which is which is competitive, which is not. But in cars, okay, fine, you can't undervalue on that. But in the second-hand car, that would happen, but not the new car. But in many other cases, it happens, and it happens frequently on everything. So you need to fix those. You need to fix those, but nobody's there to fix it. The problem is this, that the whole system, the basic elements where the corruption is, are remain intact. Nobody is challenging those foundation, but in the periphery, they're doing tweaking, and that's what killing the formal industry. That's the bottom line of it. I mean, if you see the politically, the structures and all that, and how institutions are trespassing into the other domains, which you see all the time, and that's happening on the economic side as well. It's no different on that. So the resolve to reform is absent. It just the IMF push, it's just the shock we had that we have to run those primary surpluses, we have to run those current account surpluses till we get that space to grow for a couple of years. But what will happen when the crisis come again? there's no recourse to that. So that's the thing. So yeah.
So in my view, the budget should have been, what my view was, that the compliant taxpayer should have been given a message that you're doing well, and some relief should have been given to the compliant taxpayers, and more effort should have been given to the sectors which are already untaxed, like the agriculture, retail, wholesale, the informal sector. So that was somewhat missing, but my view was that the government does not intend to take a risk during the IMF program, because what the thing is that they've achieved stability and they want to preserve that stability. That is very important, because the last time when 22, 23, when LCs got blocked and there was a lot of problem while repatriating dividends, the government does not want to go to that place again. So that was my view. So all in all, if you see that the tax collection, the major revenue spinners are the same. Government wants to collect 6.8 trillion as income tax, and which is the major portion of direct tax. As Ali already mentioned, that a lot of income tax is also collected at import stage as advance tax on imports, and an indirect due taxes, sales tax is the major revenue spinner, and FED has been increased on certain commodities. So SBP profit continues to be a major revenue earner for the government in the non-tax revenue, and the petroleum levy, which is also expected to increase by.
I think this SPP profit of 2400 is hard to achieve. That last year the SPP had a profit of about 400 billion rupees, and this year, based on the numbers right now, there is about 20% reduction in that. So expect this to somewhere about 1.9 trillion or something. So you'll have a shortfall of about 500 billion from SPP profit. But I think the petroleum levy, they'll be able to get that number somewhere close to 1500 billion.
So major issue has been the current in the current expenditure has been the domestic interest payment. If you see, it went up from 2.7 trillion in 2022 to 8 trillion in FY25. So this had been due to higher rates, higher fiscal deficit incurred, obviously, and an increased debt stock as a result. So now, with the rates declining significantly from 22% to 11%, expected to go down by another 1% to 10%. So domestic interest expense is expected to come down, which is going to be a major relief for the government. And that is the reason that the current expenditure is expected to be lesser than last year, because domestic interest payment was the biggest component on the overall expenditure side.
But your development spending of 1.1 trillion would be compromised because the tax collection would be lower than the what actual targeted one are. And to attain the primary fiscal surplus, because they're going to be shortfall of 500 billion on the SPP profit, they're going to be 300, 400 billion shortfall at least on the FBR revenue. So there'll be definitely some cut in this development expenditure, and there is a chance of some imposition of new taxes or some kind of harassment like what happened in the last year with the formal sector.
So
as
as you already mentioned, and Ali already mentioned, that so this year, this is the first year that IMF has approved in the FBR target 400 billion collection via enforcement measures. This is the highest number until allowed. And as Ali has mentioned, that if this enforcement measure 400 billion is not collected, obviously the government will have to announce alternate revenue measures to generate this amount of tax. So this ambitious target of fiscal deficit of 3.9% consolidated fiscal deficit hinges upon, obviously, on achievement of FBR taxes, and that hinges upon the enforcement measures and the targeted revenue collection of 400 billion through those enforcement measures. So obviously some legal tweaking is expected, whereby the authorities would be able to collect tax.
So, Sami and Ali, there was also mention of certain automation and e-invoicing and all those other stuff in the speech. So that that indicates that there are also certain steps.
Yes, absolutely. Obviously, the long-term theme of FBR is digitization and obviously reducing the interaction between the taxman and the taxpayer. But this year, enforcement measures have taken place during the past year, and next year also they're targeting. So, from if you see from the authorities' point of view, obviously they believe that taxpayers from where there is genuine tax demand has arisen, but they hide behind stays or other legal measures. So this is their view. But obviously, if you see from a taxpayer's point, sometimes there is a very uh, the demand is not right, the tax demand which they've assessed. So obviously, this is a difference between the taxpayer and the tax authority. But this year they're also uh, preparing a new draft form for the individual taxpayers as well, so that to simplify the form and make it more easier for people to fill their returns.
But there's a problem. There's the good thing about e-invoicing and all that. But at the same time, it's going to discourage some online marketplaces, which are developing and still in the nascent state and all that. So those online the marketplaces have to collect the taxes based on the vendors and all that, and they have to be registered. And it's a responsibility of the online marketplace to register them, or it's a responsibility of the courier service which is delivering that to do so. And they say that that is incentivizing the other retailer and the wholesaler who operates in the physical space as if they pay their tax. So we know that wholesaler and retailer do not pay their tax, but they're looking to collect some from the online marketplace, and that's why they're entering all those into that. Then there's another lacuna in the budget, which I hope they'll correct it. So which if in case of an electronic, if you order something which costing 20,000 rupees, and if you do a digital payment, you'll pay a tax of 400 rupees. But if you do cash on delivery, you'll pay a tax of 52 rupees on electronics like mobile phone and all that. When I asked the people, they said that "Yeah, this usually happen in the mobile phone. People pay COD on these. People usually pay digitally on marketplaces or smaller products. Fine. So that is a rationale they're giving, but they're messing up as well. But the e-invoicing overall is good, and if they'll be able to do so, that will help. But the problem is that those who are getting out of the tax system, they don't have any incentive to come in, and you cannot expand the tax base without reducing the rates. I mean, it's counterintuitive. Whenever you increase the rates, people move out of the system. So if they increase the rate of cash on withdrawal from the bank deposit for non-filer from 0.6 to 0.8%. And we remember that when DARSAV applied that tax in, I think, FY16, the currency in circulation started moving up. The currency in circulation to M2 ratio was 22% historically between FO5 to FY15. And after that, FY16 to FY22, it has moved up to 30% or something. Now they've increased it further. Now the question is that will currency circulation increase or decrease? We don't know, but history suggests that it increases. The other problem is this: when you impose taxes on those formal goods, the sales tax and GST and the FEDs and all that, the informal sector grows. When the informal sector grows, overall cash economy grows. So when you have 18% GST. Now, like you were saying that your friend in Netherlands is paying 56% income tax and you're paying 40% income tax. How much GST that your friend is paying on the milk he buys? How much GST that your friend is paying, or how much taxes that your friend is paying when he buys a car? How much tax he's paying when he buys a telephone, a mobile phone? How much tax he pays when he buy an airline ticket? So and so forth. Okay, you talked about he gets the free education. Okay, you send your kid and pay 60 or 2,000 to 100,000 or whatever the per month on a school fee. Then you pay your 40 to 50,000 rupees on your water bill. Then you pay 18% GST plus circular debt surcharge, plus lutrum butrum duties on your electricity bill. Yeah, and I just keep on adding on all that. Everything you've been paying taxes from the nose. So if you reduce those taxes to the level where Netherlands is, I'm sure you would be happy to pay 6% tax rather than 40% tax. So that is the story. And but with this high rate and low enforcement, there's no enforcement. I mean, enforcement is not there, governance is not there. What will happen when you increase the tax rate? It's a simple, intuitive thing that people will evade. The marginal guy would go out of the system. And that's been happening. And that is not going to stop unless you improve the enforcement. And that has to start from the custom valuation. So for me, if you have to do any reform, from where you start from the custom valuation. If you start doing that, everything will correct that. But nobody's talking about that. FBR guy is not talking about that. FBR guy talking about all the other things, but not talking about what's happened and the valuation of imports. So that is the crux of it. So I think that is very important to do so, but that's not happening, and things would not happen that way. In terms of growth, they say a growth of 2.7% is high. As we earlier talked about, the last quarter numbers are inflated. They'll come down to somewhere about 2 to 2.5%. That will bring the base lower, and next year growth, as Sami is saying, that 2 to 2.5%. I think I would rather say that 2.5 to 3.5%, somewhere in between, will grow, and it depends upon that because interest rate has come down and all that, and agriculture is at a very low base. And then coming from the agriculture, the funny part is the way the government is doing the reforms. I mean, let's talk about some ironies. There's so many ironies in the reform process the government is taking for the past 2 years. One reform is doing away with the wheat support price. I think all of the people in this room agree that wheat support price was a bad policy. Okay, we are doing away with it. Wonderful. Okay, what we did last year, we announced a policy of wheat support price at 39 rupees, 3900 rupees per bag. Yeah. Farmer did the growth and all that. And at the time of harvesting, the government then decided to open the import when international prices were low. Imports came in, stocks move up, and the flow starts from the new crop. Prices came down. Farmer made a loss. Now, if you are doing with a support price which is being there for decades, you tend to support the farmer in the transition period so that the farmer would not get bankrupt and overall the next crop would not be affected. What you did is like to bring the prices down right at the time of the harvest, you import it. You didn't learn from that lesson. Fast forward this year, okay, there was no support price. But just before the harvest time, the Punjab government released its stocks. Prices came down to 2000 rupees. And farmer made even more losses this year. Now, what are the implications of this? Farmer would have less money to buy input for the next crop. So the next crop, the cycle, be it rice or whatever, is going to be adversely affected. The other implication is nobody is growing import. I mean, nobody is growing. I mean, many people are not growing. No, it's not nobody. Many people are not growing imports, wheat. So they'll import wheat. Pakistan is a big contributor in the global wheat. So when the Pakistan production would come down, the global prices would move up, and Pakistan will import, and that will have a higher import bill. Okay, that's one implication. The other thing the good thing is that other people will grow something else. Different people at different areas will grow something else. They'll do the iteration and all that, but the next 2 3 years may be difficult in that iteration process. Some fail, some will succeed. In 2 3 years, okay, we'll get to know that when they get this region, this crop is good. In this region, this crop is good. And then people get to know about how to improve the yields and all that. But in the process, in that reform, you're killing small farmer. That's one issue. So there are other ironies in the reforms I told you about this in digital invoicing and digital economy. What you're doing to the online marketplace? Again, you're doing more damage to the game. And then you have a tariff policy, but again you're not ready to depreciate the currency, and then you'll do those import restrictions. So you keep on adding, and this there's so many examples of irony all that. So we don't have the time as they're saying it to me. So I'll stop here, and I'd like to take more question apart from my friend. We did some gym together, so we had that connection. So I'd like to take a question from other people as well.
I think we have one
I
question
think we
from
have one
online,
question.
from ARL.
ओके दिस इज अब्बास फ्रॉम अटक रिफाइनरी। ये जो आप लोगों ने स्लाइड्स दिखाई थी जिसमें हमारा सेल टैक्स का इशू भी हाईलाइट हो रहा था,
जी
इस इशू का बैकग्राउंड बेसिकली ये है कि देखें, सेल टैक्स आफ्टर 18th अमेंडमेंट जो है ना वो डिविजिबल पूल में चला जाता है। तो गवर्नमेंट ने ये किया कि ग्रेजुअली सेल टैक्स कम करके पेट्रोलियम लेवी बढ़ा ली ताकि वो फेडरल के पास ही रहे, यहाँ तक कि सेल टैक्स को जीरो कर दिया। अब जब सेल टैक्स जीरो हो गया तो हम लोगों के ओएमसीज के रिफंड आना शुरू हो गए, क्योंकि आपके पास आउटपुट में कोई टैक्स ही नहीं था एडजस्ट करने के लिए, और कंपनीज का प्रेशर था गवर्नमेंट पे कि हमारे रिफंड्स प्रोसेस करें। तो उसका उन्होंने इजी वे आउट ये निकाला कि उन्होंने हमारे पेट्रोलियम प्रोडक्ट को एग्जेम्प्ट करार दे दिया। अच्छा, वैल्यू एडिशन का यूनिवर्सली कॉन्सेप्ट ये है कि वो पास ऑन होती है एंड यूजर को। जिन इंडस्ट्रीज में बाकी में मिल्क वगैरह में जहां पे उन्होंने एग्जेम्प्ट किया भी है, वहां पर जो कंपनीज हैं, जो इंडस्ट्री है, उसको इजाजत होती है कि वो अपनी प्राइस सेट कर सकें। हमारे लिए सबसे बड़ी नॉर्मली ये है कि हमारी प्राइस रेगुलेटेड है। तो आपने सप्लाई चेन में एक सेंटर में ब्लॉकेज लगा दिया, और वो कंपनी किस तरीके से बेयर करें सारा, इसका बहुत ज्यादा इम्पैक्ट आया। लेकिन रिफाइनिंग अभी भी सबसे बड़ा कंट्रीब्यूटर है, और हमने 5-6 साल निगोशिएट करके एक पॉलिसी की थी कि हम एनवायरनमेंट फ्रेंडली फ्यूल्स पाकिस्तान में बनाएंगे।
जी अब्बास साहब,
उसकी
आपका
निगोशिएट
क्वेश्चन क्या है? जरा क्वेश्चन पे आ जाइएगा प्लीज।
तो ये जो सेल टैक्स वाला इशू था गवर्नमेंट ने एड्रेस नहीं किया, और जिस तरीके से आप लोग कह रहे थे कि ये मैन्युफैक्चरिंग में कोई इम्पेटस ही नहीं लाना चाहते, सर्विसेज को करना चाहते हैं, तो ये तो बिल्कुल ही ग्रोथ के अगेंस्ट जा रहा है। और मुझे तो लग रहा है कि लोकल बिजनेसेस बिल्कुल बंद हो जाएंगे और सारे का सारा जो है प्रोडक्ट वो इंपोर्ट हो रहा होगा।
Ji Abbas Saab, you're absolutely right what you said and all that. I mean, refineries are facing so many challenges. They faced a challenge of diesel smuggling from Iran. Then they're facing another challenge of high imports by the new players. Aramco came into Pakistan with Go, and they're giving a huge discount, and they're importing more than what is required. And when they import more than what is required, and the PSO imports as well, then what would happen? The domestic production by the refineries goes down as well. Then they're having another problem. Refineries is because we are importing LNG as a must import, and the demand of gas is going down as the captive is moving to the grid because of the exuberant prices and all that. So there is a less production of domestic gas. If there is a less production of domestic gas because we don't have any storage of gas, there's a less production of oil as well. When there's a less production of oil as that, there would be less raw material available for refineries to produce as well. So refineries are facing those kind of challenges as well. Then I've been hearing about refinery policies since 2020 when Nadeem Babar was the petroleum minister. And until date, the story is same. The policy is coming any day, and it never came. And again, the sales tax issue, what you mentioned, is there, and we've been highlighting about that, and we'll keep on highlighting that. but that is going to kill the domestic refinery. And that is a classic case of that, how you kill the domestic sector by those kind of skew taxes. Now, another thing which was happening in the EFS, they're ending EFS now, as you all know. That's another example of that. When we talk about this irony, this refinery thing is another irony. EFS is another irony. So thank you for mentioning that, Abbas Saab, and we'll write about it. And I think other people should mention it in different places. Yeah, policy there, but in a letter will spread the policy.
But right now, in terms of EFS, only 18% GST is now imposed on import of cotton yarn. But Aptama and other players, they want to extend it to cloth as well, the imposition of GST, and they've argued for imposition of certain penalty on import of uh, polyester yarn as well. But let's see what happens. Right now, they've obviously imposed GST on import of cotton yarn, which was the biggest.
Okay. Yeah, we have another question.
Yeah, I have one question about the GDP growth. You mentioned that there should have been some measures where you actually go towards the growth part. But what is happening is, if you look at the budget, that the overall borrowings, they are assuming that they will be from domestic market and hardly any foreign borrowings have been assumed, right? And probably what is apparent is that there is a kind of indication from our countries like China and US and probably Saudi Arabia and UAE, they're going to roll over the existing debt, but they're not going to give you any debt. We don't have access to the capital markets, international capital markets, and hardly any FDI is coming. So how can you actually promote growth? Because if you actually go for a growth path, which you did in 2022, then we know what happened. Like we had a 36% inflation because what we decided to do was to burn reserves to give a growth. So what is the solution out of how you grow in the absence of any foreign flows? Because if you increase your imports and you try to grow, then you run into a problem where you don't have reserves to support those imports, and then you have a foreign currency crisis.
Either it should come from exports.
But
And
exports are not increasing. We know that there is no investment going. There is no plan, right? There is no new area where you can actually grow.
So that you said it, there is no plan. That's the major issue.
But as you said that, without the foreign inflows, we cannot have growth. What happened last year is, like, State Bank bought about $9 billion from the interbank market in FY 24, and from June to January, I think they bought about $7 billion something. So what they do, any dollar that is in surplus in the interbank market, State Bank is buying it. And what State Bank is doing from that, it's servicing its debt. So part of the servicing is in the current account when you pay the interest payment on the debt, and the part of the servicing is in the financial account within the balance of payment where you pay the principal amount. So if you say see the financial account in this fiscal year, it's negative, and while the current account is a surplus. So that's a problem. So you need to up the financial account. For that, you need to have a borrowing. The other area is you need to up the capital account where you need the FDI. They both are not coming. So when they are not coming, and when you have low reserves, you have to keep the current account surplus. That's a simple equation. And for keeping current account surplus, you have to strangulate imports by hook or crook. And when you strangulate import, you don't get to the growth. So that's a kind of trap Pakistan is in, and that fiscal primary surplus is ensuring that you run the current account surplus. That's ensuring that you run the current account surplus, and you do the consolidation unless your debt to GDP and your ability to pay your debt, or your ability to finance your imports through your reserves move up to a comfortable level where the domestic entrepreneurs start investing in Pakistan. They start bringing the capital back into the Pakistan, or they bring the capital from the informal to the formal sector, and they bring the partners from outside. to do joint ventures, we'll then reach the growth. And when they bring the partner from the outside, that bring the capital from the outside as well. So because Pakistan banking doesn't have that sort of capital, that will be able to do the capital imports financing, the machinery and all that, and then your economy would start moving that way. So till we graduate to that path, which may happen next year or next to next year, depending upon the pace of the reforms and the confidence to gain, we are trapped in the low growth and low employment.
So in my view, what our plan is hinged upon, as Ali mentioned, it's hinged upon the fiscal consolidation, because this IMF program, the primary anchor of this program is primary surplus. Okay, so that is the main plan. From an economic growth point of view, where we have to generate jobs, employment, taxes, documentation, more enterprises. In my view, the best plan is what Vietnam has done, or Bangladesh has somewhat followed, or Cambodia is what they're doing, is to become part of a global value chain where you import more and export even more, and utilize your workforce, which is obviously trained, and compared to us, it's much more skilled, and utilize it in a much more better way to generate more per capita income and generate much more exports. And obviously, attract FDI in export-oriented sectors, like what Vietnam has done. They have Samsung, and or what Bangladesh has done, and even Cambodia is doing. We met some tire manufacturers which had already established a plant in Cambodia, and now they were looking to establish a plant in Pakistan because of the tariffs imposed by the US on even Cambodia. So that is the way forward, in my view. If even if FDI is attracted, it should be attracted in export-oriented sector, because in a country which is like Pakistan, which is deficient in foreign exchange, attracting FDI in sectors like which services sector has has also been a problem, because after that, that capital has to be repatriated, and for that you need more sources of foreign exchange, and then we get stuck again.
I think we have another question here.
Ji, Assalamu alaikum. Ashfaq here from AgroCorp. Acha, in your slide, surprisingly, the withholding tax rate for services, for non-specified services, which has increased from 9% to 15%. Surprisingly, it was missing there. So one of our business, the effective tax rate has gone up to 80%, which is totally, unsustainable and ridiculous.
Effective income tax rate.
Yes, it has gone up to 80%.
Wow.
So, and even the specified services rate has gone up from 4% to 6%. And one of our businesses' effective tax rate has gone up to 60%. And that
Because you pay withholding.
yeah, and it's minimum tax. So what are your thoughts on that? And I mean, what other services are being affected? I mean, Engro is badly affected by these two changes. 4 and 6% for the specified services and 9% to 15% for the general services.
No, obviously, this is that Ali had already mentioned that even in our direct taxes, withholding is counted as part of income tax. So even our direct taxes are majorly indirect in nature. You have to pay tax, it's minimum tax. There's no way out of it. And another part that he mentioned, that documented sector are at a significant disadvantage to the undocumented sector. So this is another part, because you're paying 6% on one service, you're paying 15% on another. The undocumented will not pay anything. So this is going to stifle the growth of the documented sector, and give a
So
unfair advantage.
what will happen? Your market share will be taken by the informal player. Unless you correct that. And if that practice to continue for the next 3-4 years, maybe your sponsor would say that let's do away with this business.
And secondly, because as Aman has and already mentioned that there is the budget has been prepared with plus minus in the mind, and the deficit in the mind, how to reduce the deficit to the level where IMF would agree to the budget. And not a lot of thought has been given that what economic impact this particular step would bring on a micro level or on a macro level. So yes, that has been an issue, but as we already mentioned, that the actual plan for the budget is to meet the primary deficit target, and that is the overarching objective. So these, obviously, for the government, these things are minor, that 4% to 6% they get a collection for example, the collection was 5 billion, now it's 8 billion or 10 billion. So that contributes to their primary deficit target. But obviously that has a very detrimental impact on the firm which is operating in that sector. So that angle has probably been missed or overlooked.
By the tax experts, not by the discussing here.
Yeah, so we have any other question?
But I was explaining the thought process which the government is.
Yeah.
Assalamu alaikum. I'm Anas Iftikhar. It's not a question, it's just a comment. When you discuss how to bring informal people in the formal sector, one thing is the rates. But I think there is another factor that should be considered by the FPR and people like you, and that is the enforcement and the compliance.
Absolutely.
Not the enforcement, but the compliance. The formal sector has to withhold taxes of its vendors. And for that, it has to has a compliance department, tax department. But when you want people to come from informal sector to formal sector, the cost of that compliance is too much.
Significantly.
Yeah.
When an informal sector company is buying from its vendor, they are giving rates on cash basis. But when they want to withhold tax, they increase their prices of the supply things. So it's very for them to move from informal to come into formal sector. It's a very big step. So if you want them to come in the formal sector, I think government should reduce, FBR should reduce the cost of compliances that they have to undertake. So that's my comment. Please do your working on it. And
Yeah, absolutely, absolutely. The cost of compliance is very high for, especially for the SMEs, and they spend like hundreds of hours per year in terms of dealing with the sales tax and the income tax returns and all that. And in a small company where they don't have the legal teams, where they don't have the finance team and all that, it's the entrepreneur that is dealing with that. And there's too much of the time of the entrepreneur is spent on those compliances. They don't really think about that, the big businesses. So that is an incentive to move away just to avoid that compliance in itself. Having said that, but rates are very high as well. And then another thing which we need to mention, that somebody talked about the exports and all that, is about we cannot grow our exports without rationalizing your indirect taxes or the direct taxes collected at the import stage. So when Sunny talk about this Vietnam, Cambodia, Bangladesh to become the value chain and that all that, or you get more exporters, exporting sectors, then textile, or within textile, smaller players to come into that play and all that. So the biggest challenge is how to get the refunds. So if you're a big player, if you have an access to FBR, Pindi, State Bank, Islamabad, you're set, you have lobbying media as well and everything, okay, you get your refunds. But if you're a small player or if you're a new player to export, you're doing some experiments, if you don't get the refunds, how can you have 18% or more cost get into your export proceeds? You cannot export the inefficiencies outside Pakistan. So we talked about energy and other competitive inefficiencies, just the taxation refund issues and the inefficiencies that cannot be exported. So in my view, enforcement is absolutely important, and lowering the tax rate is also very important. So they both needs to be done and all that. And enforcement is one, enforcement is some, because there is an even when you lower the compliance, that delta is very high to jerk. So there will be guys who jerking. You need to pick that guy. And then you need to incentivize that guy with lower compliance cost as well. So there are multiple factors which are required to be dealt with, and the government is saying they are easing the compliance and return filing and all that. So we wait for the tax experts to comment on that how easy it is, but we'll
See when
find
the
out.
new form is released.
Huh?
We'll see when the new form is
We'll
released.
find out that. Yeah. Sir, my son.
Shiban from Dolans. I just want to ask a very small question. As per your economical acumen, what clauses, provisions you think FBI will slash down when they will announce the Finance Act? I think some of it's a past practice. There's some, if the bill is announced, there are some
Changes in the act.
provision changes introduced in Finance Act. So, if I could freely speak, what are the deadliest economical?
I don't, for example, because they've calculated the budget on these revenue measures. So I don't think there is going to be a major change in these revenue spinners unless there is a big anomaly like this, where effective tax rate has gone beyond a certain level. So I don't think there is going to be a major change because, for example, why did they not reduce the salaried individual tax rate? Because of the tax collection target. They could not have an alternate revenue measure for that. So unless there is a big anomaly, they might adjust it. Other than that, I don't think a major revenue measure is going to be withdrawn because they need to meet the target of the fiscal deficit primary surplus.
Yeah.
Or there going to be some pressure from somewhere top. I think those things are already dealt with. But I agree with some.
So any questions from online speakers? I don't think. Yeah, Wakas, please.
Assalamualaikum. Wakas, I'm Wakas from Pakistan Cables. So I don't have any question. I have a one request to the forum that since all of us know that the next year would be a consolidation year, and all of us know that there will be a demand. Demand will not be there in the market, and the businesses will not be that effective and that robust in the coming. In these years when minimum tax adjustment cycle has been reduced, that will hit businesses a lot
Significantly.
where all mostly businesses have had the minimum tax over and
Obviously.
above in 2020 24 2025, which they were expecting to adjust in moving forward, but now
So I checked with PwC after this was announced that the carry forward losses for these, because if a minimum tax is imposed, you take a tax loss and obviously you try to recover it in next year. So what they said was that the previous tax losses, the limit to recoup that is still 3 years, but for a tax loss that you incur this year is going to be 2 years.
so my request to the forum is that this is a major
Yeah, this is a
major
major issue.
setback for the formal sector, and what I'm getting from the talk is that formal sector is at loss. So um, our
Effective
our
tax rate is going to be significantly higher.
our request to the government should be from this forum that at least provide some relief on this front, because this would hit corporate sector significantly moving forward.
So I think we have a lot of questions and answers. Thank you, Ali and Samiz. Now I would like to request Abdul Alim Saab to uh, present the closing remarks.
Ji, Assalamu alaikum once again. First of all, thank you very much, Ali and आपने मतलब दोनों ने बहुत अच्छा, I mean, you have presented it very well, but to the audience, I think you let them go very easily. I had brought them up from Ali from Lahore and इनको भी Paco ऐसे, so you didn't ask, didn't give them a tough time. I think they engaged you on the economy, and the real issue was the budget. So which was discussed, but not. I think it was more of a complaint, which is always there. I think, and so let me give you my perspective of things. And I mean, I've been on the media also on this issue, and the budget is always a difficult task. And when you are balancing the books, like the way it is done in Pakistan, it's not very easy. And I think the government of Pakistan had its own challenges. It's had, I think, as the two gentlemen mentioned, that they had their own preferences. Also, there are certain sectors that they don't want to touch, broadening the tax base and all those. And there are issues which they know that the growth is needed, but can they manage it in the limited resources that they have? And we have been in touch and in dialogue with the government also. We've met the finance minister as late as the 20th, I think about 10 days before the budget announcement. And not all these issues, we didn't meet just for the tax issues, but we met it for some other issues, but we did raise, and I think at that very moment, one of the issues that we raised was the import duty relaxation that they were announcing. And he gave us a very candid answer. He says, Kalim Saab, ye to aa raha hai. Or then he gave the example of Cambodia and Vietnam and all the others. And he says that, aapko ye rona har waqt milega. But I think we'll have to test it. We are going to do it for 4 or 5 years, and otherwise the export won't increase. And then he gave some of the examples of some of the industries, which I don't want to mention because some of them are our members also. So he says that jab tak inko challenge nahi hoga, I don't think they will do this. So there are winners, there are losers in the budget, but we have to look at the bigger picture. I think if you were to make the budget, how will you balance the book? I mean, certainly they have done something, they have been harsh on some of the sectors, and they have been very, I think, very relaxed on many of the sectors. So from that angle, I mean, for example, publicly our stance right now is that we think that the government has missed the opportunity to collect tax and revenue from many sectors which they didn't, particularly broadening the tax base. I think they don't seem to be very serious on the retail trade and wholesale trade and agriculture also. If you remember, for last 4 or 5 months, they've been celebrating that we have now the agriculture has been approved for tax by all the 4 provinces. And only yesterday in his press conference, he did mention that well, this is an issue which we didn't discuss. The Prime Minister will discuss with IMF chairman, CEO, meaning that nothing is coming on the agriculture tax, income tax that we are talking about. So these are anomalies which we are used to, but that doesn't mean that we should take it like this. I think there are challenges, there will be problems. However, my advice to you as a member of the chamber is, first of all, anomalies. I think you have a couple of days only to come back on anomalies, because we will be submitting it to FBR. I mean, we can be as aggressive as we are right now in the media right now. I mean, both in the print and electronic media, we are very vocal. We are raising the issue, we're not hiding, but we are doing it in a very respectable manner. We are conveying our views, and we will continue to show our displeasure on some of the things, but everything is not wrong here. I mean, we have to put ourselves into their shoes also, and things have to be more or less, I mean, somebody has to give up. Where we are very critical is that, as I said earlier, they have totally ignored this 9 trillion cash in informal economy, which is there. They have not come out with anything significant on the broadening the tax base as far as the traders are concerned, and the other sectors that we have mentioned. Somebody mentioned that, the 60% of the tax of this country comes from this industrial sector, which is sitting here in this room. And how long can this continue? Or exports is an issue for them. So we will continue on this. We are very unhappy on the personal tax because we have been promised many times. This is an issue which we have raised it with the finance minister, but and with the other authorities as well. But I think they have their own limitations which we cannot, we have even discussed it in our informal meeting with IMF representative here, but we can only go that far, but that doesn't mean that we will accept it. So all in all, things are challenging, but they are not as negative as I heard sitting in this room from many of you. I think the country has been going through this type of challenges. If you go back 2 years back, 3 years back, we had similar issues, you know. What we must give credit to the government, which I think Ali also mentioned in his initial remarks, that we have to give credit for the stability that has come out in the last 2 years. And we have paid the price. I mean, we have seen 38% inflation. We have seen exchange rate going as bad as 350 plus. But things have been brought to some sort of a discipline, but not as much as we want it to be, and as not or as good as the capacity of the country is. But there are certain favorites, there are certain non-favorites. We are not among the favorites, but that doesn't mean that we should not put our foot down and say what is necessary for our growth. So I will wrap up by saying that, first of all, if you have issues, raise it now. Raise it not only with us, but at your own forums also, because all of you are part of different forums as well. I think there are certain injustices which has been done very blatantly, which we will raise. But if we get more support from other, I mean, for example, I'm part of the refinery board, so I know that the government, on the one hand, has signed the policy, on the other hand, has not done this. They have done it in a different fashion, but that's not the proper fashion. It doesn't give peace of mind to the investors. So there is nothing in the new Finance Act which is. I mean, this is a question which is I'm asked on the TV channels, is that what is there for FDI? There is nothing for FDI in this thing. There is a danger that we will lose more talent from this country, because I think the salary taxes have been hardly any noticeable, and unfortunately